So today, the Nasdaq and the S&P 500 reached new all-time highs after a stronger than expected June jobs report. The Bureau of Labor and Statistics reported 147,000 non-farm payroll additions in June, surpassing the Dow Jones forecast of 110,000. Also, the unemployment rate fell to 4.1%, defying economists' projections of an increase to 4.3%. This robust jobs data has reduced expectations for the Federal Reserve to cut interest rates soon, with traders now pricing in a 95% chance of rates remaining steady in July. This positive economic news followed ADP data showing a decrease in private payrolls last month, which is a concern that was dispelled by the official government report. With that said, let's go ahead and see what the experts are saying about this non-farm payroll report.
Steve, let's bring you in here. What's your outlook in terms of the impact on July, September, which was pretty much a foregone conclusion?
I think this is a very mixed report, Melissa. I have to point out, I don't even know if President Trump is going to like this report.
Why?
73,000 of the job gains were government. Now, it was -8 on the federal side, plus 40 on the state side, and I think it was plus 20 or 30 on the local side. So what you have is you have the weakest private sector growth since October of 2024. And it was bizarre to go down the table and you look at it, you see a lot of negatives, a lot of positives, it goes back and forth. I'm trying to find the diffusion index, which tells us what I don't see it here right away. It tells us the percentage of industries that were raising and lowering. You did have good job growth in the service sector, which is the opposite of what ADP thought. But private education, again, up 51, healthcare up 58, leisure and hospitality up 20. These were the same places we had job growth previously, so not much change there. But you do have to take account. What I think happened here is this anomalous hiring in the state and local government is what makes this so much higher than what the street was estimating. I think there was a feeling on the street that government would fall and the private sector would be weaker. So you would have 70 or 80 minus the federal government or minus government. Instead, it was 70 or 80 in the private sector plus. So it's a mixed report. It's good the unemployment rate fell. That's a good number right there. It's good that we're positive on job growth. I'm just not sure what's happening at the state and local level that's driven all of this employment. I would think it would be a very mixed feeling, and the Fed would say, okay, I need another month of this, especially because, as Rick pointed out, the claims number is healthy again. So I wouldn't be too concerned about that part.
Now let's take a look at the Nasdaq's chart. So currently the RSI is indicating that the Nasdaq is in overbought conditions at this very moment. Now, in my opinion, and based off the technicals, the Nasdaq is currently in a topping process. Now, once we do find a top in the Nasdaq, I'm looking for these gaps to be filled towards the downside. That means from current price, we're looking at a 11% decline to almost a 20% decline in the Nasdaq from its current price. Moving over to the S&P 500, we're looking at a 8% to a 15% decline from current prices to fill these gaps down below. Once again, I would like to reiterate that the downside risk is far greater than the upside potential. With that said, here's two stocks that's also in overbought condition, starting with ticker symbol MSFT, Microsoft. From recent lows, the stock is up over 44%, leaving this huge gap to be filled towards the downside. Now, current support from Microsoft is going to be at 487. If the stock falls below that level, then look for a pullback to 477. Overall, my target to the downside is going to be at 439. From current prices, we're looking at a pullback of over 11%. Above current support at 487, there is resistance at 502 and at 515. The next stock is going to be NFLX, ticker symbol NFLX. So from recent lows, the stock is up over 57%. With resistance right above at 1361. Now, something that I want you guys to take a look at is just take a look at this bear flag right here. As you guys can see, it was invalidated with this up move right here. However, at the peak, we did end up retracing back towards that bear flag. Now, if we take a look over to right here, we can see that we also invalidated this bear flag, which means at some point in the future, we're about to retrace back downwards towards this bear flag. With that said, current support for NFLX is going to be at 1270. If it falls below that level, then look for a 9% pullback to 1178. And if that level gets broken, then look for a further pullback of 24% to my downside target at 986. Now, above current support, you have resistance at 1316 and at 1361. Alright guys, if you like this video, go ahead and leave a thumbs up and let's get this video out to more viewers. Also, if you're not yet subscribed, do consider subscribing to the channel. And as always, thanks for watching and I'll see you guys in the next one.